Something is happening inside the UK housing market right now, and almost nobody understands how close we are to a full-scale collapse. Not a slow decline, not a correction, a trigger point event, and the people most responsible for it are the very same landlords who have been leaving the market in record numbers, because the moment they panic, everything else follows. And that moment is happening now. Over the past few weeks, I've been tracking something that didn't add up. Landlord forums exploding with panic posts, letting agents reporting floods of sudden valuations, mortgage brokers getting calls from landlords they haven't heard from in years, all asking the same question: how fast can I sell? That's not normal behavior. That's exit signal behavior. And when enough landlords panic at the same time, you don't just get higher rents, you get a crash. The warning signs are everywhere. Buy-to-let mortgages at their highest rates in over a decade. Operating costs hitting record levels. Insurance premiums nearly doubling in some regions. New regulations arriving in waves that landlords can't financially absorb. And after years of being pushed to the edge, landlords are doing the one thing the market cannot survive. They're all trying to leave at once. Here's what's actually happening behind the scenes. In several UK cities, landlord selling instructions have surged so quickly that agents can't process them fast enough. Properties that were stable rental homes only a month ago are suddenly appearing as must-sell listings. Some are priced far below market value because the owners simply want out before the next regulatory change hits. And that mass exit doesn't just shrink rental supply, it destabilizes the entire market. Because for every landlord who sells, 2 more are thinking about it. And when they see prices starting to wobble, their instinct kicks in. Sell now before it drops further. That panic creates the exact crash they fear. It becomes a self-fulfilling collapse. And we're closer to that chain reaction than most people realize. But here's the twist almost nobody is talking about. The buyers who used to absorb these properties, the corporate landlords, the institutional funds, the big operators, they've slowed down. Some have paused altogether. When that buying machine cools off at the exact moment thousands of landlords start to sell, the bottom of the market becomes dangerously thin. Too many sellers, not enough buyers. That imbalance is the spark that turns a landlord exit into a housing crash. I checked transaction patterns from the past few months, and the picture is clear. In areas like the Midlands, Wales, and parts of the South East, sales chains are failing at rates not seen since 2008. Not because demand isn't there, but because mortgage affordability is collapsing. Buyers can't qualify, landlords can't hold on, and corporate investors aren't stepping in like they used to. The result? Properties sitting longer, prices softening quietly, and pressure building underneath the surface. The government won't admit it publicly, but the data is already pointing to a structural break. Councils delaying rental updates, agencies publishing incomplete statistics, market reports arriving weeks late. When transparency drops exactly when stress rises, you can be sure someone is trying to manage the narrative. Meanwhile, renters are watching their choices shrink, and their rents rise faster than wages. First-time buyers are stuck between falling prices and impossible mortgages, and landlords are trapped between rising costs and dropping yields. This is what a system at breaking point looks like. And here's the part nobody wants to accept. The next phase is already forming. If the landlord exit accelerates, even slightly, it won't just push rents higher. It will trigger a nationwide pricing shock as thousands of properties hit the market in a compressed window. Forced sales, reduced prices, collapsing yields. And once the slide begins, even landlords who planned to stay will start running for the exit. You don't need a crystal ball to see where this leads. Less rental stock, more tenant competition, falling house prices in pockets where investors pull out, mortgage stress pushing more owners into selling, and a rental market concentrating into fewer, larger hands, the exact scenario that leads to long-term rent inflation and less consumer control. This isn't fear-mongering. It's what the data shows before every major housing correction: panic at the bottom, silence at the top, and pressure everywhere in between. We're watching the early stages of the UK's next housing shock, not because demand is weak, but because the system can't absorb the speed of the changes happening right now, is what makes this moment so dangerous. Markets can handle pressure, they can handle uncertainty, but they cannot handle acceleration. When multiple stress points hit at the same time and compound each other faster than people can react. And that's exactly what's unfolding inside the UK housing market this very second. Landlords aren't simply reassessing their position, they're scrambling. They're calling brokers in a panic, asking whether they can switch products, refinance, or offload before the next rate jump. They're messaging in private groups at 2 a.m. about service charges that suddenly doubled, or a new compliance update that wipes out the last of their profit. When you zoom out, the pattern is unmistakable. Landlords aren't preparing to exit. They're actively trying to escape. And this is where the real instability starts. 10 years ago, if a wave of landlords sold up, the market absorbed it. Buyers were confident. Credit was cheap. Institutions were hungry. But now, every part of the system is strained. Mortgage approvals falling. Valuations coming in lower than expected. Buyers pulling out because their fixed-rate offer expired midway through the transaction. It's a perfect choke point, and landlords flooding the market right now is the worst possible timing. What almost nobody realizes is how quickly this can spiral. All it takes is a few months of surging listings in key regions, Birmingham, Nottingham, Cardiff, Outer London, and local prices begin to dip. Not dramatically, not enough for headlines, but just enough for nervous landlords to notice. And once they notice, everything speeds up. They list their property too. The next landlord sees that. They panic. They list theirs. It becomes a wave, then a surge, then a liquidation event disguised as increased supply. Meanwhile, buyers aren't stepping forward to catch any of this. The affordability crisis has knocked out the bottom half of the market entirely. First-time buyers can't stretch, second-step buyers can't upgrade, and investors can't justify returns. So these landlord-owned properties hit the market, sit there, and slowly drop in price. Not because they're bad homes, but because the demand pool underneath them is evaporating. Behind closed doors, letting agents are saying it outright. We've never had this many landlords asking for valuations at the same time. Some are reporting ratios as high as 1 exit inquiry for every 2 managed properties. And when that's the baseline, you're not looking at a market under pressure. You're looking at a market preparing for a structural reset. Local councils are quietly bracing for impact, too. They can already see what comes next. Rental shortages exploding as landlords leave. Emergency housing lists growing. Tenant displacement becoming normal. And house prices being dragged down in areas where investor concentration was high. When the private rental sector cracks, everything connected to it bends with it. Inside government departments, the silence is loud. Reports delayed. Data quietly adjusted. Statements carefully worded to avoid acknowledging the obvious. The system is weakening faster than they can stabilize it. And when political strategy hinges on maintaining confidence, they will always choose silence over honesty. But the truth is simple. The UK housing market is entering a phase it has not faced in over a decade, a phase where the people who used to support the market are now the ones undermining it. The landlords who once powered the rental sector are now pulling it apart on their way out. And the longer this continues, the closer we move toward a moment the country isn't prepared for. A landlord-driven shock that hits renters, buyers, sellers, agents, lenders, and councils all at once. We're watching the early fracture lines form. They look small now, but they always do, right before they widen. And if there's one thing history proves, it's this. Housing markets don't collapse when people expect them to. They collapse when the people holding the most weight decide they can't hold it anymore. And right now, those people are already letting go. The question isn't if the correction hits, it's how fast it spreads, and who gets caught when the bottom finally gives way. Subscribe if you want the next update, because in the coming weeks, the signals are only going to get louder, and the people paying the price will be the ones who didn't see the collapse starting in front of them.